G'day guys, welcome back to Pete's Investing. This is the update for the SP 500, the NASDAQ and the GermanDax and the Nikkei. As well, we'll be covering the VIX. Now you can see there the S&P and the NASDAQ have risen slightly since our last update. The DAX and the Nikkei have moved sideways and the VIX has dropped. In terms of the heat map, you can see there on the bottom left, you've got the, on the longer term, the monthly CCI 150, still a bullish trend. On the weekly, it's a mixed signals on all of them. And on the daily, predominantly bullish, but the VIX and the GermanDax have turned bearish. In terms of trading idea, we've got the we look at the higher term trends. So, for example, if you want to trade the daily, we go in the direction of the weekly trend, or if you want to trade on the hourly, we go in the direction of the daily trend as a minimum. Step 2 is you take a fresh look at a fresh breakout from the CCI 150 moving averages to open your position. And step 3, to close your position, you close it out when the CCI 150 enters into the moving averages of those CCI 150. So first looking at the VIX, on the monthly there is no CCI 150, but on the weekly we've got a bearish signal. You can see it's broken down through the moving averages. And on the daily it's been in a decline for some time along with the moving averages of the CCI 150 below its moving averages as well. Now if we jump to the hourly chart, and we've got the daily here as a reference, but on the hourly chart, you can see there it's actually dropped lower since our last video, and you're hitting this support at 1336. That's a small bounce, and that could be a reversal possibly, or at the very least a minor retrace. And you can see there we had a bullish divergence versus lower lows on the price. That Fibonacci should be lower now, and even if you drew it back to that Fibonacci level between that revised low to that high, you can see there it's hit that target area. The target area we always choose between the 23 and the 38% level, so between those levels. You can see there, had you taken a bullish divergence to that point, it already hit that little, just touched that retrace level, but this wider range, it's also hit it more convincingly. You see there it's gone up through the 38 and it's starting to bounce down again. Now on the S&P 500, on the monthly, we're bullish. The CCI 150 is trending along above the moving average band. On the weekly, that's into a neutral positioning. You can say that we had a bullish movement back here, then it broke into a negative, and then currently it's neutral. It's in that band at the moment. Now you'll notice on the monthly and the weekly, we do have a bearish divergence. So higher highs on the price, lower highs on the CCI on the monthly. And that's a bearish signal, so we may actually see a retrace to the downside possibly. On the weekly as well, we've got pretty much a double top on the CCI versus higher highs on the price. That's also a bearish divergence. And on the daily, it's been doing this for some time. We've got another move to the upside on the daily with a lower highs on the CCI 150. Now if we go to the hourly chart, again using the daily as a reference, you can see there it's actually broken up past the previous resistance, and I'm going to delete that. So it's at basically blue skies at the moment, so we're not sure when it's going to reverse, but at the moment higher highs are to be determined. Now here we've got back here we had since our last video, we've got lower highs on the CCI versus higher highs on the price. That's a bearish divergence. Now, in this case as well, we're taking only long trades. Let me just clean this up a bit. So during this period back here from the 23rd of April, and that was back here, you can see that you would have entered the first one, you would have made 47 points. The second one, 14. This one, you would have lost about 50. There was a bullish divergence there as well. You always pay attention to that, and then you would have entered another position there. And that's 136 points. Closed it out there. These moving averages closed down and you would have entered another position, made 22 points there. You would have lost 15 there, you would have made 63 there, and so on. So always trade in the direction of the higher time frame if you're trading on the hourly or the intraday. Next we look at the GermanDax. So on the monthly, we're still in a bullish momentum, although we do have a bearish divergence versus high highs on the price. On the weekly, it's also a bullish movement. And again, we've got a bearish divergence, double top on the CCI versus higher highs on the price. That's a bearish divergence. And on the daily as well, we've got a bearish movement to the downside. It's actually broken down past the CCI. So that's a bearish signal, and that's probably starting to play out with this bearish divergence we've got. So again, whether you take it from that point or from that point, it's lower highs versus higher highs on the price, and it's actually hit this resistance area at 18,936. Now if we go to the hourly chart, if you're trading on the hourly, you can see that we only trade in the direction of the daily. So in this case, we're going short only. So we're going to change that to short positioning. So you're only taking short trades. So you can see there that would have made 7 points. That one made 91. That one made just 0.9, and that one actually lost 53. So taking only short trades. In this case, you would have had a bearish divergence as well during this period versus higher highs on the price, and that would have added to your case to go short in accordance with the CCI on the larger time frame as well. The Japanese Nikkei, so on the monthly it's bullish. We did have a bearish divergence back there just for historical purposes. It came out and hit our target. On the weekly, we've got a bearish signal at the moment. The CCI has dropped below the moving averages, and I've also drawn this Fibonacci retracement back to that level, that low. So we always take it back to the previous low before that divergence started, and that's a 23-38% level. So that's our target range should it break to the downside. And that's obviously a long way off yet. And on the daily, we've got slightly actually got a bullish movement at the moment based on the CCI breaking above the moving average band. But notice we did have a Fibonacci range there, and that's actually come down with that bearish divergence versus higher highs on the price. It came down and bounced perfectly off the 38% level, so that's actually worked nicely. Then it's bounced further to the upside. So this has got a mixed signal. It's bearish on the weekly, but at the moment it's bullish on the daily. Now if we jump to the hourly chart, again using the daily as a reference, taking bearish trades only. So I'm going to use the short signal only. So again, from back there, you would have taken short positions where that started turning negative with that CCI breaking below the moving average. You would have taken a short trade there, and that's closed out there, and it's generated 62 points on that one. Now this one's currently going up on the hourly, so you avoid taking any long trades, and you wait for it to break to the downside again. And lastly, the NASDAQ on the monthly. We've got a bullish movement. The CCI is trending above the moving averages, although we do have a bearish divergence versus high highs on the price. And I've drawn a target area between a 23 and a 38% level. That's a minimum target. Of course, sometimes they do break right through and actually can go well beyond the 100% retracement level. On the weekly, that's currently a neutral positioning. You can see the CCI is broken up into that moving average band, and I've drawn a Fibonacci retracement here. Should it break to the downside, that's the minimum target range. But at the moment, it still looks like it's trending further to the upside. And on the daily, we've got a bullish movement with the CCI above the moving average band. It's had a nice little run in the last couple of weeks actually, and you can see there it's actually broken up through that resistance at 18,672. So we're going to remove that. And similar to the S&P, it's actually got a bit of a blue sky at the moment, so we're not sure where it's going to turn, but as soon as we get a signal for resistance, I'll let you know. On the hourly chart, again using the daily as a reference, going long only, we're going to turn on the long signals. So again, going back to the 23rd of April, so back to this point there, let me just get rid of that Fibonacci. So you would have taken long positions from there. You would have made 223 points there, 308 there, 28 there, 649 there, and so on. So it's again entering only when on the price chart, the price breaks above the moving average band, and also the CCI 150 is broken above its moving average band as well. That's where you take long positioning. And I've got the closed position when the crossover of the moving averages on the price crosses over to the downside. That's where I cross it over. I do have this exponential moving average line. Let me just zoom in. I do have this exponential moving average 9. So you can have a lot tighter stops if you like, or close out positions. But I'm letting it run. Say for example, you would have entered there, and it closes out when a price breaks and the moving averages break down. So you actually might lose a few points there. Alternatively, you may want to use the exponential moving average 9 as an exit signal. So you probably would have closed it out on that little bar there and then re-entered it at that point there. I'm just letting it run using the moving averages as a major entry and exit signal. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.